Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security or transaction. Trading options involves risk. Visit the OCC website, www.optionsclearing.com, to read the characteristics and risks of standardized options. PSW provides educational and training services that are meant to teach you the risks and potential rewards of trading options. And we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you can't afford to lose. Past performance does not equal future results. And results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any losses you may incur as a result of the information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone. All right, now we're ready. All right, so let's do the share screen thing. Everybody should be able to talk to all participants. Oh yeah, when you respond, please respond to all participants, not privately, because then nobody can tell what you're talking about or what I'm talking about. Let's see, share, right, share my screen. Here comes something. Yeah, okay, now I think you see my thank you for using WebEx screen. Let's see. We'll go here. All right, so here's my problem at the moment. Let me get my chat window up. Okay, so you can see what happened. It was, where was I? I was right about here. I was entering, very happy with my entry at about 1:45. And then I said, oh, the webinar is starting soon, so I better go get some water. So I had 2 open contracts, just 2. And look what happened. So here's 12:40, 12:45. Right about here, it was down here. I wasn't losing money. I was right about here. I was very happy with my entry at about 551.10 or whatever it is for the average. And and I went away for like 10 minutes to get some water and something to eat. And I came back and it's all the way up here. I'm down like $2,000 bucks. Now it's down 1,400, but still, that's just ridiculous. It's now, by the way, though, see, the thing is, when I got back, my reaction to 52.23, so actually it was just crossing over 52. So my reaction on the way up was to add 2 more positions and then 2 more positions after that. So I had 2 more at 52 and 2 more at 52.20 or 52.15 or whatever it was, because I don't believe in the move. I think it's I didn't see a good reason for it, and I don't think it's going to last. I think it'll pull back. So given that, I felt like it was a good idea to add more rather than to sit there and freak out about it. So doing that so far saved me $1,000 bucks. But now here's the rub. It's only going to save me money, or it's not really saving me money, I'm still behind, but it only saves me money if I'm quick to act. So all I want to do right now is just get to a lower than 6 position. I don't really want 6 open oil positions. So I'm going to be thrilled to take anything I can get here. So as soon as it stops going down, I'm going to want to lighten up a little bit, especially if it crosses a 0 like 90. So like here, so we get to 86, as long as it stays below 90. Now it's 85. So 85 will be my next line I get worried about. All right. And by the way, you see all these numbers, that's how many bids there are at each price. That's how many discovered bids there are. So in other words, when it only checks each one and verifies when it hits it, and then it keeps a history. Uh-oh, somebody's got their audio on. Oh, it's a terrible time for that, guys. All right, wait, I got to go look at the people and see who's not muted. Why is this happening? It's not supposed to happen. Who is not muted? What the heck? Okay, well, I guess somebody figured out they're not muted. I don't know why that happens. I honestly don't know how to fix that myself. All right. Anyway, where are we? You're shocked on short CL? No, I shorted CL because I think it had enough of a run. It was due for a pullback, and we've been making good money all day until this. Now, you see what happened is because was looking at something else, which you really, it's so dangerous right now to play these things that you can't even do what I just did, which is look away for 10 seconds. Because I really just want to make up some of the money I lost right now. So I'll be happy just to get back to like a few less. Now, it went over my line. Now it's a 52. Now it's a 51.90. So screw it. I'm going to take a penny off here. I can't. I can't. All right. There you go. Now I'm down to 4. All right. So for the day, I'm down $800. It's not terrible, but and also, you know, it's not terrible. And also, I'm short at 52, and I wanted to be short at 51, so I should be thrilled, but I'm not because I don't know yet why oil did that. I don't know what caused oil to spike like that at 12:45, but something did, obviously. So I'm going to take a quick look at the news and see if anything happened that I see. So give me a second. Let me look it up on the other computer. JP Morgan settles a mortgage suit. Offshore drillers get an upgrade. Oh, that's interesting. But why would that make oil go up? I mean, Zekrom Group upgraded drillers, which I agree with. They're all too cheap. We you know, last week I was like bang, bang, bang on rig. So it's not like we don't think that. Oh, wait. Oh, it's comments from the Fed. That's why. Those bastards. Cox Laterra, who we knew was going to be dovish, and Cox Laterra says rate hike Fed governor thinks rate hike should be off the table this year. That's what goosed the market. That was just right about that time, 12:45. Rate hike should be off the table this year. So it's more Fed speak is popping us up. Now, that makes me want to short more. So that's a stupid reason for oil to go up. It's like it obviously hasn't helped them for the last $50 down, so why would it suddenly help them? So I'm happy with my 4 shorts, even though I'm down a bit, but I'm still happy with them. And so I'm going to hang on to that and see what happens. We got a nice $500 move on natural gas. And the star of the day so far has been the Russell, which we, amazingly, this is a funny thing. We've been playing the Russell short since 3 a.m. And even though the Russell is way higher, because we caught these little dips each time, well, I'm up anyway, $30,000. You know, I've not once played a long position in the Russell. Every single one has been a short. And even though we've been going up all day, now obviously I could have just gone long and relaxed, but even though we've been going up all day, what's happened is every time it's gone up, we played the short, gone up, played the short, hit the next level, play the short. And now we're in between, so we're off, so we're flat. But each of these 10 lines has been a really good spot to play the short. Now, since you've had this consolidation, though, I don't expect 1180 to be another good short. It's probably going to be a good long for a bounce. So unless 1180 breaks, it's not a short anymore. But on the way up, it's a fantastic short. You get rejected, rejected, rejected over and over. So that's been a lot of fun. Any questions on the futures before we move on from this? I know some people had some questions earlier in chat about the futures. Nope. Okay, everybody quiet today. If you're quiet, I'm just going to ramble. You know that. I'm warning you. All right. Anyway, although rambling last week worked out because we didn't intend. We had a fun seminar last week because we didn't intend to do it, but what we ended up doing was making some really good points on Transocean rig, and let's see. Take a look at what happened since then. So we had rig. Remember we did the short put, and I was talking about how you can get such great questions. Chrissy, if you have a question, type it. Please send to all participants, though, when you ask a question, so everybody can see it. Oh, that's gross. Shoot, how do I fix this? Custom indicator. Nope. 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 Oh, come on, there must be a way to change this. Custom. No. There we go. Candles. Okay, candles are much nicer. All right, so last Thursday, I was banging the table on rig. Remember, we had the $15 position, and we noticed that you could sell the $10 puts in 2017 I did, but you didn't see it. Well, Chrissy, let me see. Okay, wait, Chrissy's having problems, and she still won't chat to all participants. I have to assume you put your question in the Q&A box where you're not supposed to type. Let me see. Nope, I don't know what you're talking about, Chrissy. Okay. All right, no, guys, do not use the Q&A box. Wait, hang on, let me. Not this box. It takes up my screen. You guys can't see it, but it takes up my screen space. Wow, I can't even, that's interesting. Wait, maybe if I do that. No, I can't even respond in the Q&A box. It's weird, it just doesn't work on my system. So no Q&A box, that's all I can say. All right, 52.27 new high on CL. Whoa, what? Oh, damn it, it's going up again. All right, so this is what I'm doing though, so I don't care. If it goes up a bit, I'm hoping it's not going to go past here, and I'm going to short again. And what am I doing? I'm raising my basis, but you have to keep in mind, oh, damn it, it went down too fast, I was going to do another one. All right, so I have to keep in mind though, my last play, I don't care about the whole position. What I care about, oh, nice. What I care about, geez, well, not nice now. All right. Now, I just added 2, or I will add 2 if it ever fills. I'm going to follow that up. Ooh, this is getting ugly. All right. So I just added 2 at about 52.30. All right. And the purpose of that was to raise the basis of the rest of them. So I'm not really playing, I'm not trying to win on all of them. If I can sell the 2 that I just bought for like 52.20, that means I will have made $200 worth of progress on this position. So I'm not looking for a big win on those last 2. I'm just looking to help lower the basis, the cost basis of my whole position, which is, as you can see, look how fast I lost money. Now it's down to $2,100. Now I'm down $2,000 bucks. So I was like $1,400 while I was looking off the screen. All right. So let's see. So yeah, please shout it. If you see oil doing something crazy, let me know. Oh, by the way, the dollar has dropped to 93.69 because the euro has jumped to $1.15. When the euro's popped all the way back to $1.15, it started the day at $1.13. So the euro's up more than 2%. I don't know what that works out to. It's no, it can't be more than 2%. The euro's up anyway. So the euro's up. Wait, 1% would be $1.10. 2%, so 2 cents. Yeah, it is more than 2%. So the euro's up more than 2% for the day. Or no, it's less than 2%, but it's up nearly 2%, which is a very huge move for a currency, though, especially major currency. And it's all about Greece because the euro is down because they thought the whole euro was going to collapse. Now that Greece is looking like they might fix it, everybody's happy and they're buying euros, and that's making the dollar weaker, which is the only reason oil is popping right now. All right, so the short story is oil is popping because the dollar is down 1.5%. So oil is up 6% in response to the dollar being down 1.5%. So when the dollar comes back, if the dollar comes back, I should do better. But unfortunately, this is going to be a big loss right now with $4,000. See how fast that goes while you're doing it? I don't want to add more if I don't have to, but 52.50 is probably a good place to add 2 more. So, if I'm determined to stay with it, just out of principle, this is what I should be doing. I should be adding 2 more here. So I'm going to add 1, and I'm going to add another. So now my losses, though, are going to pile up very quickly if it keeps going up on me, so I have to be careful of that. But now I've raised my basis to 52.15, so now I just need to get back to here to get even. But even here, see how fast that came back? So even that now, I just make that 10 cents on the 2 that I just entered. And I'm very happy now to get those 2 out. Well, couldn't. I just want to improve my basis. What the hell? Boy, that thing's moving fast. And I couldn't do it. See, it's not filling. Which is not a good sign. If I can't fill on the way down, that means it's probably bouncing to the upside. All right, so I'm going to take these off, and we'll just have to see what happens. Now, on the bright side, though, of course, we have a lot of long plays on USO. Oh, you bastards. Look at that thing. And it wouldn't fill. There we go. Now they both filled. All right. Yeah. So what I did is I raised, the extra two. I just played them and I made $200 while I was doing that. So that little move down saved me $200 because I added the two and quickly took them off. And so what that did really is it raised the basis of my other six. My other six by what, like $40 each or $30 each? 3 cents, not $30, 3 cents each. But every cent matters, So now my average price, which is probably wrong, is about $52.25, and that's where I'm going to break even. I don't think that's right. Well, I can tell you where I break even. If I have 6 and I need $2,400, that means I need a 40-cent move. So I don't actually break even until 52. I don't know what the hell this thing's talking about with this average price. So you have to keep track yourself, unfortunately. That's where it starts getting tricky, especially if you're trying to do a webinar while you're doing it. It's very complicated. If I can concentrate, it's a lot easier. But this is a good pattern. This looks kind of toppy. That's some really big volume here, so it's not likely that's going to get worse for me. And we'll see how it plays out, all right? And 52.50 is, of course, a very, very key point. So now we can look at a bigger picture. Let's back this guy up a bit. We had a run from 47, and we'll call it 47.50 really, to 52.50, and these are inflection points that we expect coming off of 50, because 52.50, then 50, that's $2.50, right, which is 5%, and 47.50 is 5% below. So now we've got a 10% move up. And a 10% move up with, did we have consolidation? Yes, we did. We had consolidation right where we're supposed to have consolidation, the 50 line. So we're not going to count this as a 10% move up. Then you have a 1.5% move up, and we did have, 2.5% move up to 51.25, and we had consolidation at 51.25. By the way, the consolidation is back to exactly where it should be. 67 is halfway, halfway to 25, 66. So see how the consolidation works? You just keep taking halves on the 5%. So the 5% move is to 52.50. Half of that is 51.25. That's this line here. Half of that is 50.66. So you see how perfectly those lines work? So from 51.25 to 52.50, we expect the same kind of pullback as we got here, which is about half of that move. So we should hopefully get a pullback to 50.66, where I'll be thrilled to get out of this son of a bitch thing. See, but understanding that and knowing how it works helps you, for one thing, not panic when the thing's going against you, and second of all, you know, I have to bring my basis up to the point where the retracement is going to help me. It doesn't do me any good to have a higher basis if the higher basis if I don't even expect a retracement back to my new basis, right? So that's all critical. So we shall see what happens now, and but hopefully we can get down to 50 point. My goal here is 51.66 or 67. That's a pretty big shot down from here. So I'd be very happy to get it. But that's what we expect as a retrace per the 5% rule. All right, now let's get back here. So, okay, Christy said, I thought CO was too low. Why surprised it's up? I'm not surprised it's up. It's going up generally. We're playing the pullbacks, and also in the larger portfolios, we have a huge amount of long positions. So the thing I'm doing is locking in profits each time. Losing $2,000 here is nothing because the big USO plays and the UCO plays are making a ton of money in the longer term portfolios. So it's not important that I lose a little bit of money on USO. And what I'm doing is each time oil moves up, I want to lock in my gains. So I'm more inclined to play to the downside. All right. And also, that's the thing. The one thing we do know is when we get a big move up, we're going to get a retracement. Big move up, retracement. Big move up, small retracement. Big move up, retracement. That I can count on. I can't count on the big move up. You don't know which way it's going to go off the line. All right, so you always just want to play the percentage move where you get the, where you want to see where you have a good backstop that you can count on to make your play. How do you short the futures? It's easy. Just if you have, well, this is Think or Swim, and in Think or Swim, all you have to do is click on this, and it says sell. When I click on this box, it says sell. I put in a sell order for the future. That's it. No, not naked calls. This is direct. You're directly trading futures contracts, and I'm shorting. So I'm short one futures contract when I do that. You just have to be aware they're very, they're $4,000 in margin for each contract, and you're obligated to own. You're trading 1,000 barrels of oil when you're doing this stuff per contract. So a 1 penny move is $10. It's 1,000 pennies. So every penny is $10 for you on these contracts. It's a very big deal, as you can see. I mean, look how fast I lost money on that thing. All right. Now, if I don't like the way it's going when it's getting near the 52 line, I probably should lighten up because it seems too bullish, and I'm not going to get the pullback I'm looking for. Meanwhile, these other indexes are back up, but not so much. So where are we now? Now, you can, of course, I don't know if I sell naked calls. That can get so dangerous with oil, but you can play this with USO too. You can go over to USO, and let's see, USO. Okay, so if I wanted to play this with USO instead, I could take the option. It's at 1950, so I want to take an option that does not have much premium in it. So maybe the 22, which is 250. So what? All right. So the 22 is like 260-ish. So 260 minus 22 is 1940. So there's only 10 cents of premium or so in this contract. So if I wanted to sell this instead, I could just sell these contracts. Oh, I'm sorry, buy the puts. I'm buying the puts. I could buy the puts to be short, and the same thing goes the other way if you want to be long. You can buy the 1750s or the 17s for 280. Okay, and that's so if you want to do it that way instead of playing the futures, you can do that. And frankly, we did the math once, and we figured out there's really not that much difference because if I bought 10 of these contracts for $2,600, right? Then what's going to happen? Then it's a little complicated, but if you think of oil as being how much is it? Shoot, it's $50, right? So oil's $50. This is 19. So this is 20, let's say. So it's going to be each dollar of oil is going to be this is 2.5 times. So it's going to give you a $1 move in oil is going to give you damn it. 40%. It's going to give you a 40-cent move in this contract. So if oil moves $1, this contract's going to go up or down 40 cents. All right. So 40 cents is $400. All right, and 40 cents on a oil contract is also $400. So you're actually getting the same leverage if you buy these puts. What's the difference, though? The difference is that extra premium, that extra 10 cents, not also the cost, so it's a lot cheaper to trade a futures contract. So if I trade the futures contract, I got like a $2, $3 cost to my in and out trade. If I trade the option, my cost is going to be what, like $10 or something like that, or $15. So that's a hell of a lot more money. Okay, there's that, plus there's a bid and ask spread. There is no bid and ask spread on the futures. So there's a couple of ways you get dinged on the options, and since we're only trying to make $200 or $300, if you're getting hit with $30 in fees and another $50 on the spread going in and $50 on the spread going out, before you know it, you blew all your profits. All right, so there's a very, very big difference trading the future, trading options to trading the actual contract. Now, on the other hand, you could just buy 100 shares of USO instead and actually take $1,900 and do it that way. And then you won't have as much friction cost going in and out of the trades. So that's the way to go as well. And it is very liquid, and you can do it that way. But the simplest way, and this is, obviously, it's like you can do these things, but it's not hard to trade the futures. So it's better if I teach you guys how to trade the futures than to teach you some crappy, clunky way to do it without trading the futures. So the way we definitely prefer to do it is by trading the futures. Now, as I was worried, they're not getting a very good sell-off, but on the other hand, we're also not breaking up over here. So at the moment, I think I'm willing to watch it and see what happens. Natural gas is flying up. Unfortunately, I let go of that one too early. And the dollar is still way down at 93.50. It's testing the 93.50 line. So the dollar's now down 1.25%. Oil's up 6% for the day. Oh, and now I'm getting burned again. Look at this son. Look at that, $4,000 bucks. Isn't that crazy? So 52.65, but this is going to be it because the dollar is bottoming out. Oh, damn it. All right. 52.59, and I'll do another one, 52.59 if I can, and I can't. All right, so I added 1. I would have rather have added 2. Let's watch it and see what happens. Look at that, now it's 34. That's how fast this thing moves. Nope, that didn't work. Okay, so unfortunately I couldn't do 2 because I wasn't fast enough. You see how, and again, it's a discipline, because if we had that spike, I don't think it has merit. I went and checked the dollar. Let's put DX over here. We don't need to watch NG. So let's look at DX. DX is the dollar. And so I think the dollar is going to stop falling here. And if the dollar stops falling here, then this, if my theory is correct, and the oil is rising because the dollar is falling. Now, what time the dollar start falling? Well, right about here, when Europe closed at 11:30, had a big drop in the dollar, right? And when did oil start going crazy? Just around noon. Okay, so let's see what the dollar is around noon. 11:30, yeah, right about, see here, 12 when it peaked up. So yeah, so right here at noon, the dollar drops. We'll try to get the time frames about the same. Okay, so here's the dollar going down, and here's oil going up. So my theory is that if the dollar bounces up, oil will go back to 52. And so I just want to be there when it happens. Oh, and there's 64 again. It's like, oh, come on, give me a break. Whoa, here we go. That's what I wanted. All right. Man, it's just been crazy. It's like a fucking Bronco. So I am praying at the moment that this holds over here. 93.50 line holds and bounces back. And if we can get a nice bounce back on the dollar, then I'll be okay. If the dollar starts collapsing, as it is right this second, then I could be totally screwed. So I'm going to tuck my tail between my legs and take that loss. So probably this is a blow-off spike, because this is a big move for the dollar. 1.3, you know, getting towards 1.5% in one day. That's a crazy move for the world's largest currency. All right. So, futures, where are we? And GC is going down with the dollar. Yeah, well, that's going to happen, sure. Thanks for, okay. I didn't get my fill on rig and I wanted, and I lost out on this move. Do you feel rig will retrace again, and if so, to where? Okay, oh, that's where we were. We got distracted by oil. Oh, son of a bitch. This thing is killing me. I'm scared to leave this screen because I might go over 53. So I have to really consider my position now, because now I'm at 50. I'm way down at 52 to break even. If I add 2 more to 8, all I'm going to do, if it's $1, is I'm going to take 1/8 of that amount, is 12 cents. So all I'm going to do is improve my positions by 25 cents if I add 2 more. So my break even will be like 52.25. It's not that great. But I kind of have to. I have to test that 53 mark. And here's the thing, psychologically. You have to realize that if I add 2 more, 52.94 here, which I will, I'll show you what happens. I can still stop out those 2 that I'm adding at 53. I'm only going to lose. See, on the 2 that I added, I'm only risking, if I say I'm going to stop out at like 53, I'm only risking $200 on the 2 that I'm adding. I'm not risking a ton more money, depending on how I'm playing it, but this is my limit. 10 is my limit for sure. So my risk here, it isn't like when I add 2 more at that height that I want to risk another $2,000 or whatever. What I'm really doing is I'm adding 2 more, and I'm going to definitely stop them out. At least I'm going to stop back to 8 or 6 if we go over 53, and then I'll hold on and see what happens. but I'm kind of banking that the 53 line now is going to stop us. The 52.50 line didn't do crap to stop us, so I'm hoping the 53 line does. But for that to work out, what I have to do is I'm believing that this dollar should not be below 93.50 and will come back. Because that is a huge, huge move for the dollar. For essentially all the money on Earth fell 1.3% today. Okay, so every dollar that everybody has on the planet Earth, $100 trillion, lost 1.3%, which is $1.3 trillion just evaporated from people's bank accounts around the world. That's what that move means in the dollar. Now, is that realistic? No, it's not, because the euro isn't as big as the dollar. Right? So it's real important. I go on and on about these macro things, but it's important to understand this stuff when you're trading, because if you don't believe it, if you don't understand what you're doing, and you don't actually know how things work, then you don't have the balls to make these kind of decisions when push comes to shove. So, the euro is probably maybe the dollar is, let's say, 80% of all the money in the world, 70%. Let's be generous and say 70% of all the money in the world is U.S. dollars, okay? The euro is maybe 20%. So the dollar is about 3 times bigger than the euro. So when the euro goes up, I'm going to double check the euro now. The euro is at 115.26. So the euro is up 1.6%, okay? That shouldn't make the dollar go down 1.6% because the euro is only 1/3 the size of the dollar. All right, so eventually the dollar should settle back to a level the dollar should only be down like a 0.5 point on the euro. Now, the immediate reaction is an even trade because people are swapping euros for dollars today, but there's a much larger pool of dollars. And the move will be mitigated over time. It won't be mitigated over 5 seconds, though. Now, remember I said I was going to stop out? I'm going to have to now. This is nasty. $8,000. So if you guys are thinking of trading the futures, this is why you shouldn't trade the futures. This is the most expensive webinar I've done to date. And I'm not catching a break at all. Look at this thing. Shit. I just simply have to stop out. Because you can't just let something like that run. Wow, that thing is flashing up and down like crazy. A lot of it is people just getting squeezed now. People like me. I mean, basically, I just say, I'm just in anything. I have to. 7.5% move in oil in one session. That's just crazy. But it shows you how underpriced it was. This is why I was banging the table to buy oil. It shows you how underpriced it was, but unfortunately, I got caught on the wrong side, and in trying to fix it, I'm not fixing it at all, so that's the thing. Anyway, so where were we? Oh, yeah, we were talking about rig, so I'm only going to pay attention to that for a few minutes and see what happens. So here's rig. Rig popped from 1550 to 1850. That's 20%. So, should it retrace? Sure, it should pull back from that 20% run, which is like $3. You would expect it to pull back roughly 60 cents to $1.20. So $1.20 will take you back right about here to the 17 line where it did do a little consolidation. And would I like it long here? Yeah, sure. I like it long. I like it long at a lot of places because, frankly, that's year to date. Here's a year. You're down from 45, so it's not like we've really knocked it out of the park. Now, last week we were looking at selling RIG. We were looking at selling 2017 $10 puts. Now, see, they haven't even moved that much. So if you want a good play, these are still $255. But now now rig is at $18.50, and you can still sell them for $255. We were selling for $3 last week. So it takes a long time for those things to really come down in value. You could still do that rather than chasing, rather than doing any kind of chasing rig. So you say, I didn't get my fill on rig. What didn't you fill, though? You didn't fill at $3 on a short put. So reality, if you filled to 20% extra, if you were going to do 5 and you did 6, you'd be doing the same amount of money. So that's all it lost was 20% of it didn't even lose 20% of the price. So if you sold 6 for $2.50 instead of 5 for $3, it's the same money basically. Actually, it's exactly the same money. It's the same $1,500, and you've got the same position. So all that would happen is if you got it signed in the end, you'd end up with 100 more shares of rig than before. So that's hardly even called chasing. I mean, that's just a simple position. So I still like this sale. I liked it last week at 3, and I like it now at 250 because now you got $2 more cushion to the same play. The same goes for Cliff. And I think there we were selling what? I don't even remember what the hell we were selling. I don't remember. I think it was like the $5 puts for $2 or something like that, and it came out to 3. Look at the $5 puts; it's still 185, even though Cliffs has shot up to 660. Oh, actually, what happened? They were up and now they went down. Wow. I didn't know that happened to them today. What went wrong? CLS. Now that's weird. They shot up to 7-something, and now they're back to 660. They cannot catch a break. All right, so there you go. So that's why those are still cheap. So I still like that play too. I don't know how I can say it more. I mean, if you go back to the tape last week, I'm like going bang, bang, bang. I'm like, you got to buy this or sell it anyway. If you sell those for 185 right now, your net is 315. That's less than half the price. So for a net of 315 being your worst case, you're collecting 185 on 315, which works out to something good. I mean, 185 divided by 315 is your maximum risk, 58% return on your investment by selling those. Why would you not want to do that? I know I went through this last week. Why would you not do that? Unless if you hate them and you think they're terrible and they're going to go bankrupt and blah, 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 don't do it. But if you think they're going to survive, it seems like a good trade, right? 58% return on your money in 2 years. And all you're doing is promising to buy rig for Cliff in this case, for half price. That's a good trade. All right. Angling for $4 on the $8 put. Yeah, it works too. If you want to be more aggressive, you can do it that way. So that works, Patrick. Mike says, not urgent. Don't let me distract you from the futures trade, but when you get a chance now, what do you think about November? No. Oh, NOV. No. That's National Oil Well, whatever the hell they call themselves. Varco. I don't know enough about them to give you a quick answer. I mean, if we went to take a look at it, wait, before I do that, I should really kind of look at what I'm losing. You guys, this is a very expensive seminar for me. All right, trade all products. Now charts. There we go. Now trade active trade. There we go. In the ass. All right. No, it's not so bad. It's terrible. It's not so bad. It's horrible. Whatever. All right. Just want to get back to there. Be happy. All right. So where are we? National Oil Well. Right. Oh, there you go. See? Look what's happening. All right. As I was saying, well, let's get back to that for a second. So you have to understand how things work and why they work. Otherwise, when there's and you have to understand it well enough. This is why I always say trade what you know. Because you have to know it well enough to say, oh, I know why that's happening. Like I was just saying to you guys, right? It's happening because the dollar's dropping. Now, if the dollar were dropping for some great reason, and believe me, Greece is fixed is not a great reason. So if it's happening for some great reason, and it's going to stay down because something fundamentally changed that's going to make the dollar weaker, then I say, oh, of course, then I got to really think about getting out of my trade. And the next person is asking, at what point do you say uncle? That's a complicated question. But first of all, yeah, I'm not going to say uncle when I think it's silly what's happening. I'm also not going to say uncle because, first of all, for the day, I forget where natural gas is, but I'm up like $500 on natural gas. I'm up $3,000 here, and my profit and loss for the day is $4,000 here. So my whole day is not really down that much. Certainly not down enough for me to chicken out of an oil position when I don't really feel strongly that it's going against me. I'm sorry, obviously it's going against me, but I don't feel strongly that it's going against me for good reasons. Okay, I think oil went down because the dollar. So in other words, the main reason I see that oil went up is because the dollar dropped. Now the dollar dropped because the euro went up. The euro went up, but I know that the dollar is 3 times bigger than the euro. So it shouldn't move 1 for 1 against the euro. That doesn't make sense. And even if you fix Greece, you still have Draghi with $1 trillion quantitative easing program that starts in March that we're not participating in. In fact, at the same time that our Fed may be tightening. Oh, and that's the other thing is we just looked at the Fed speak, and it was Cox-Latera at the same time had said, "Oh, I don't think we should ease," but she's only one voice, or he's only one voice on the Fed for the easing. Okay, everybody else is mostly on the Fed is saying the opposite, saying we got to start raising rates a little bit. This is getting out of hand. So it's understanding that whole big picture and all the things that affect the trade I'm making that make me decide not to say uncle, where I say, no, I'd rather stick with this because this is a bit of an overreaction. Okay? And also, we know about the overhang of contracts. There's a huge amount of open long contracts, and those guys are going to want to take their gigantic profit when you get a 7% jump in a day. Those guys are going to want to start taking some money off the table when they've got hundreds of thousands of contracts to unload for hundreds of millions of barrels. So if they can find suckers to take them off their hands at these prices, they're going to do it. All right, so that's, like I said, I'm looking for this to get back to 93.75, and that should hopefully bring oil back to 52.25, and then I can get the hell out of this stupid trade. So that's what I'm still hoping for. But meanwhile, discipline-wise, I really should, at this point, be very happy to lighten up a little bit. So if at 75, the problem is, though, at 75, you expect a bounce. So if I don't get a bounce at 75, that's good. But you do expect some kind of bounce. Expecting bounce at any 25 line, you're going to expect a bounce. So at 75, I should get a little bit of a bounce back. And boy, snap back, though, to 82. So at 85, I'm going to call it quits on 2 of them for sure. Oh, how nice. It's like somebody's like waiting for me to say it. All right, so there. Now I feel better. I have 8. I'd like to get back to 6, but I want to give it a chance to see what happens here. But at 90, I'll lighten up to 6. Now, of course, lightening up to 6, though, means I'm going to need a $1 move to make back $6,000. Right? 6 times $1 is going to be $6,000. So I need a $1 move to get $6,000 back, all the way down to 51.88. So I don't really want to get back to 2. If I can avoid it, I'd like to keep the 8. But on the other hand, if I get back to 6 and it shoots back up over here, I'll be very happy to add 4 more back because that'll raise my basis again. And then I'll have 10 short. So this is a tricky spot, but I don't like the way that's doing. I don't like the way that we're hanging tough here at the 75 line. I don't mind a little bounce, but I don't want too much of a bounce. And there's 90. And what I said I would do at 90, I said I would get out, right? 92. See how I should have gone now. 94, now I'm screwed. 92, 93. Now I got to see now I want to see if the 95 line breaks. If 95, 90, see? 89. All right, now up 93 again. So I don't like the way the 90 line's working. 95 hopefully will get rejected again. 93. Come on. 99. Oh, thank you. That was nice. Oh, give me a break. Now that's nothing to do with the dollar, because the dollar's still staying right where it is. So somebody's just trying to punch oil up now. Now, I'm not watching the news, so I don't know what's happening, but let's see where we were at the top of these candles. Okay. So the top of the real moves came at 53.10. This was a spike. We ignore that. So I'm going to have to go short again here. So I'll take one more short again. And 53.20 is a good number. I'll take that one too. So what have I done now? Now I'm back to being down 8,000, but I've raised the basis of all my positions because I took that little profit before. So now if we get to move back down to here, I'm going to be happy. So we're going to watch now. Very critical where this next candle forms. Is it still going up, or is it going to start coming back down and filling in here? So that's good. I don't want to see any kind of green on this candle. It's going to be very upsetting if I get a green candle here. It means I'm going to feel really bad with 10 positions open and that candle going green. All right, so this is good progress. Now, don't forget, the last one I did was 53.20. So if I just take off at 53, I've gained $200 on that last one I added. And it doesn't seem like much, but if you chip away your loss, you know, if you have an $8,000 loss, I'm going to chip away 200 here, 200 there, 200 here, 200 there. If I do that like 10 times, I'm going to pick $2,000 off my loss. And the other good thing about that is if I eventually do get the drop I'm looking for, I'm going to make a huge amount of money. So we'll see what happens. So there's 53, so I really should take that last one off the table. I don't want to be greedy, so let's do that. There we go. That filled nicely, so I'm happy. And let's do the other one. Okay, because I am worried about going back up, so I'm happy you're doing that. Like, that's a quick $200-300 I just took off. And we'll keep doing that when I get a chance. And here's the dollar still making progress, very quietly moving up to our goal, which means eventually it's going to affect oil. And I think this is a fake. I think, see, the volume is very low. Okay, so I don't believe what's going on. The volume's low here, and the volume's low here. Nobody's jumping all over this to buy. That's not a volume. There's no conviction to this move. So somebody's just hoping that more retailers come in, but they're not. All right, so we'll move on. All right. All right, oh, I'm sorry, what were we talking about? NOV. So not to distract me, but the whole thing is so distracting. All right, NOV. But this is a good lesson because you guys can see how we trade out of a dire situation. Let's see. Oh, and by the way, obviously, I can afford to lose $10,000. Like, if I lose $10,000, I'm like, oh, that sucked. You know, that's it. It won't like lose sleep over it. It won't cause me not to eat it tonight or anything like that. It's not the kind of trading you want to do if you don't have plenty of money to spend. Now, of course, I started with 4 contracts. That's why I'm at 10 now. So if you keep your trading at 1 contract and you have to decide what your max is, and you always have to know what your max loss is. You have to say to yourself, I will stop at some point. I have to pull the plug or change my trade, or you know what, I could go long on something else to make up for it. But like I said, and the other point is very important to know, though, we have all those long USO trades and all those long UCOs, so those are making a fortune. And if oil stays at this price, they're going to come in with tons of money. So this loss is insignificant compared to what's being made in the longer-term portfolios. But still don't like to lose money. So at a certain point, we'll wipe out all the gains I make on the other side. So you just have to, know your limits and know what you can afford to win and lose and so on and so forth. But you also have to realize, though, if this is not a way to play unless you can really just afford. If you can, you don't want to scale in like this unless you can afford to say, oh, I lost $5,000. Oh well, bad day at the track. It shouldn't be a big deal to you when you lose that kind of money. So where were we? National Oil Blocker. Okay. Again, this is not one I really follow, and it's tricky with these E&P companies. You have to figure out like what they're doing and where they're at now. But I believe they are probably a generally good deal. Let's take a look at it. And so, without doing a big study, and remind me in chat, and I'll be happy to look them up, like overnight or the weekend or something like that. But overnight, I guess, since it's during the week already. But you've got a nice discount here. You're back to a fairly low line there. Let's get back to Yahoo and see what the heck, whoa. Here we go. All right, so we go back to the chart. And let's go 10 years. And one thing I want to look at with these companies, what happened to them in the crisis? So in the crisis, they went down to 25-ish, but they quickly came back to 40. So you figure 40 is probably more or less their worst case. All right, and you had a little thing here, and 40 held, and then you're back here. So, obviously you assume there's some growth, And see, these are the kind of things I want to look up. I want to find out what were they doing here P&L wise? What are they doing here P&L wise? How much growth is there between this area and here? If they're doing, if they're doing a lot more profit, that's great. But of course, now we expect that profit to be knocked down. So we still think, you still ought to look and say 40, maybe 30. So now the question is, if you're going to look up NOV, let's take a look and see what kind of trades we have on them. So you look down here. And it's the same thing as we were doing last week. You say, oh, well, okay, NOV is at 54. I can sell the 40 puts for $4. That's pretty good. That puts you in at 40, which we think is going to hold. It might not hold. So I wouldn't do an amount that I wasn't willing to double down on. In other words, let's say it goes to 20. You don't mind 30. So you can commit to entering 100 at 40. And then if it does go to 20, you'll be happy to buy another 100 for 20, and then you're going to average 30. That's no big deal, right? So if you sell these for $4, you consider this like free money. All right, so I'm selling these for $4, and I've now got $3.95 to play with. So you got $4 to play with, and now I say, well, okay, so we're at 54. If I take the 55 calls for what is that, 750? What is the last sale? 770. Okay, well, let's say a little more. Let's say 790, just to be fair and put it in the middle. So let's say 8. All right, whatever, doesn't matter. So let's say 8. All right, so if I get those for 8, I've got $4 to play with. That means I sell something for $4. These are 380. These are 328, and those are 432. So that seems right. So even though it's a wide spread, you go for $4 here or 380. So I can get the 55, 67.50 spread for $4, sell those for $4, and so for pretty much no money, for maybe 50 cents out of your pocket or 25 cents out of your pocket, you're going to have this $12.50 spread. So everything up from here, you can make up to $12.50. So that's the way I would play it. I'd go with an amount. I would start off with an amount that you absolutely want to own, that you're happy to double down on, not just that you want to own. So how many shares you're willing to do on National Oil that you're willing to double down on. So let's say 200, 300, whatever. So if your max is owning 1,000 shares at $30 or $30,000, then you should be doing 500 shares at 40 with a plan to buy another 500 shares at 20 if such a catastrophe were to happen. Now, if that catastrophe never happens, you have free money for your 40. You don't get stock for 40 if it keeps going up. Don't forget 40 is 20-something% below where we are now. So it's pretty damn far down. So you have this free money. The spread, all that is basically you have a free upside on the stock. So that's the way I would play it. And again, that's also because I don't have a huge, strong feeling about it, but mathematically, it's a good play. All right, just click flatten. No, don't just click flatten. Holy crap. You get first of all, you get bad fills. There's a flatten button on the futures. I'm going to show you guys. Actually, oh, there it is, flatten. Don't touch it. All right. The flatten button kills all your trades. Just does the opposite of whatever you have and gets you back to zero. So you do that if you want to get out of your future positions. But when you do that, it's not going to attempt to do a great fill. It's just going to dump the positions at that price. So you do not want to do that unless I don't know if there's an emergency or whatever, but I'm perfectly capable of exiting a position, so I certainly wouldn't click the flatten button. Maybe Bert's joking. I hope he is, because that's a terrible thing to do. All right. We're still trending down on these candles, these 5-minute candles, so that's not too bad. The dollar's doing exactly what we thought it would do, but certainly not getting a robust response from oil to it. As we said before, though, here we go back here, so I'm going to do another one. Whoa, I'm going to cancel that immediately. Now I'm going to do another one. See, they're moving so fast, they're hard to fill. All right, so now I'm short. Whoa, son of a bitch. Oh, God. Come on, baby. Fill. No, you're kidding me. See, you know these moves aren't real when you try to fill something and you can't get a fill even though it says there are 10, 20, 30 interested buyers. They're all fake. This is a machine just trying to run up the price to try to get people in. All right, yeah, and by the way, and then oil going up is running up the S&P and all the indexes because all the E&P companies are going crazy right now. If we took a look at, in fact, if you look at rig, I bet they're probably shooting up. Not shooting up, but 1866. You see that though? Or NOV, maybe they're going up. See, all these companies are coming back nicely now. How's NG doing? Oh, look how NG went. Wow. So the thing we got to watch is the dollar, DX. So the dollar is doing what I thought it would do, but oil is not responding yet. But I'm not worried about whether it responds yet. I'm saying the big picture, unless something fundamentally has changed, I expect to get a response. I don't, just because I don't get a response instantly doesn't mean I'm wrong. All right. CLS has a conference call. What, tomorrow? That far apart? Oh, had a conference call, yeah. Well, CLS is fine. I mean, fine. Iron ore prices are in the can, but imagine if iron ore prices ever come back. So the CLS can figure out how to make a profit at these prices of iron ore. If iron ore ever comes back, they're going to be a monster. So that's definitely a company I want to be a part of. Craig, yes, we did discuss what's popping oil in the indexes. No, it's really about the dollar dropping more than anything else. I don't think anybody's seen anything else besides that that's particularly knocked oil up. Also, Koch Lucera from the Fed said dovish. She said no. I keep thinking it's a she. I think I might be wrong about that. It's Esther George. I think I'm thinking of. But anyway, so Koch Lucera said from the Fed said no interest rate raises this year. So that's getting everybody excited about everything. So we're hitting all the highs. Now 1190, by the way, is where I made all my money on the Russell today, shorting it. So it's tempting, but not with the Fed telling you they're not going to raise rates. I do not see anything particular to oil that should be shooting it up. Yeah, you see the Canadian banks are going up like crazy. Everybody's worried about the Canadian banks and all the oil sands, right? The Canadian banks are up 4% today because of this oil move. So this is the kind of stuff that's moving the indexes. It's all the E&P companies and everybody's shooting up, and they're driving the indexes up, and it's all based on oil going up. So it's just a huge manipulative thing going on right now in the market. So we'll see if it lasts. That's all. You ran I'm running a very expensive webinar. You ran an expensive errand. I have an expensive webinar going on because it killed me while it was going up. So yeah, I'm not shorting the pop. I actually got stuck short on the pop, and I really have no choice right now. I'm just going to ride it out and see what happens. CNOOC said it was cutting spending by as much as 35%, while BP said, yeah, that's true too. All the big oil companies are talking about slashing their CapEx, and of course, if they slash their CapEx, then there's going to be less oil produced and so on and so forth. But that's over the course of a year. This is going to happen, not tomorrow. All right, so it's not like this should have an immediate effect on oil to kick it up. It's now up 7.5% in a day. That's not right. That's clearly an overreaction. And meanwhile, none of these guys are going to cut their CapEx. If oil comes back, they're all going to change their mind anyway about cutting their CapEx. So did we not short oil this morning? Yeah, we did short oil. We were doing really good on oil for a while. We kept shorting it every time it popped. So we caught, early this morning, we caught this one down, we caught this one down, we caught this one down, and we caught that one down. But then, unfortunately, right before the webinar, I came in here, I shorted it one more time before the webinar, and boom, totally burned me, wiping out, obviously, everything I gained plus a whole lot more. And now it's making new highs. Wow, look at that. That sucks. I'm not pleased. All right. But again, here's the dollar doing what I expected it to do. Eventually, it'll hit the oil and knock it back down a bit. 53.50. Oh, man, it went through 53.50. I was going to say 53.50 is probably not going to be that easy to break. And it plows right through it. 53.60. Wow. That's very impressive. That's just a huge move. That's incredible. All right. Well, no. I mean, certainly at this point, he certainly wouldn't go short on it now. It's probably people are getting squeezed and squeezed and squeezed and squeezed, and they can get squeezed for a lot longer than this. So I'm going to get squeezed soon if this thing goes over 54. You just can't keep riding this thing down. You know, I mean, you can't keep adding to it if it goes up. You have to at some point say, okay, that's enough. But I'm willing to ride it out a bit and see what happens. Now let's see. Paul says, yeah, okay, sorry, Paul did that one. Mike says, Bert, keep in mind that many of these CapEx cuts are soft cuts, and and they can always bring it back easily. That's right, I just said that. Tesla remains top pick for the third year, 325. No, I don't think so. Well, it's interesting, though, with oil going up, that's going to make people happy about that. Is natural gas a sympathy move up with oil? No, natural gas should have been going up. It was too cheap. You know, natural gas is stupidly cheap also. We've been long on that for a while. And we were long on that this morning. And we have, what, a 10-cent move here in natural gas, which is a lot of money. That's 10 cents, $1,000 on natural gas, too, per contract. Unfortunately, though, it's trumped by this loss in oil. But no, our gas line was 266. We were long over here at 266. And frankly, it'll go back to 3 at some point. So, you know, you can just keep going long. But you got to just be careful about a pullback and a retracement. I imagine probably now this will hold. 272 is probably going to hold on a pullback. All right, this line over here is probably going to hold because it formed a nice base. You know, you got a nice little base forming over here for consolidation. Shack. No, Mike, I'm not going to talk about Shack. Stupid hamburger stand. You know, they only have like 60 outlets. It's not even worth discussing. It's like it's a small little thing. I mean, obviously they're going to get bigger and they're going to make more stores, but they're, you know, Cheesecake Factory. I mean, you know, Cheesecake Factory's got like 1,000 or something like that. I mean, this is, or not. Who am I thinking of? Chipotle? I don't know. McDonald's has like 40,000. It's just, you know, it's not even worth discussing how much these people have. Frank Stern just says NYT. Yes, NYT had good earnings. I keep saying they're a good company, though. And Frank says Saudi Arabia and Russia have wow, what a long thing. Have numerous discussions that have yet to produce a breakthrough, according to American Saudi officials. Unclear how explicitly Saudis linked oil to Syria. Some leverage over Putin, 5 oil, drive up prices. Yeah, there's always something. That's why we were playing oil long. I mean, there's always something that's going to drive up prices. I mean, we put out so many different plays. We were doing the review of the top trades, and there was such a tremendous rush to, you know, we had 4 different trades that all did fantastically, and are probably now beyond fantastic in where they're going. So we'll see what happens. I wonder what new SA King, what? I don't even know what that is. What new SA King thinks? Oh, the Saudi King. Wow, you guys have your own codes. It's great. Backed up a little. Yeah. No, nobody's okay with $40 oil in the long term. In the short term, though, it's great for Exxon, it's great for BP, it's great for all the oil companies who have money and can buy up all their competitors for cheap. All these little drillers that came around. What you do, you know, this is what they do, though. They do this on purpose. They love it when everybody comes in, all the wildcatters go, and everybody goes and gets their loans and buys wells and starts drilling and explores and blah, blah, blah. Exxon doesn't have to do anything. They don't have to spend money on R&D. They just sit there and watch all these guys go out and drill wells, and then as soon as a bunch of people discover wells and they know where all the good stuff is, Exxon lets the price of oil drop, and I mean just Exxon, but the cartel lets the price of oil drop. All these guys who discovered perfectly good wells suddenly got cash strapped and go out of business. Exxon walks over there and pays them barely what the well is worth, not less than what the well is worth, really, just to get these. And these guys want to just get the noose off their necks, so they sell out to Exxon and all the other oil majors, and then boom, the oil majors own everything that was explored for. That's how it works. It happens every time. That's why you have cyclical businesses. People get screwed cyclically. All right, so, damn, 54 bucks. I got to do some more. I'm sorry, got a couple more. 54. That's crazy. I'm going to go to 14 at this point, but not yet. Let me go up a little more. Wow. it'd be nice if it ever pulls back, but I'm not sure it will. We may go to 55 and stay there. Could become the new normal. Are you going to look at turning your UCO calls into a bull call spread at some time? No, I think we're going to take them out. In fact, we get to 55, I'm probably going to want to take a lot of these longs off the table because that's a damn good run. Now, in the long-term portfolio, we have some USOs. Those I might turn into a spread because those are, I don't necessarily want to take them off the table, and I think oil's got a long way to go. So we could probably have fun like turning that into something where we sell puts, sell short calls along the way. The shorter-term stuff, no, I'd rather just take the profit, and see what happens. I'm not, I'm not looking to have major commitments to oil. 55, I think, is kind of fair for where we are now in the market, but I also think that for today, it's a bit soon. All right, so we'll see what happens. Why not add longs as long as the trend is against you and offset the short losses? Because I think it's going to pull back some, I still think it's going to pull back because everything else is doing what I thought it would do. See, dollar topped out exactly where I said it would. And the only difference is oil is spiking higher than I thought it would. So I'm just willing to play it. If I'm wrong, I'm wrong. But, it's like we had another session a couple of weeks ago. I made $20,000 on the same play or a similar play. So it goes up and down. Sometimes you're going to lose money when you play this way. So, yeah, would I be tempted? I am tempted. Between 54 and 55, I think the oil's a great short here. So that's why I am going to add two more. If we get to 54.50, I'm certainly going to add two more short. I'm not getting out because I certainly think we're going to see this line again, 53. And I think, see, here it says my basis is 53. I don't know if I can do the math on that, but close enough. Basically, my basis has been raised at this point to about this line. So all I need is to pull back to that line, and it's going to be even, strangely enough, right? So we'll see what happens. Cliff, the CEO, announced that the company expects no liability stemming from the involvement of the facility, which will operate as an independent unit. Yeah, they know what they're doing. They got it under control. Of course, Caesar said that. Caesar's had a similar plan that didn't really work out, so you never know. People get screwed cyclically by the trade market. Yeah, that's why they call them cyclical. You're right. In the 80s, Exxon was nicknamed Exxon Intergalactica. They used to bid on land auctions where there was the most interest by competitors, assuming it would be a hot prospect. Everybody used to keep Exxon landmen from seeing their bids. Yeah, that's how the game is played. The guys with a huge amount of money get to push the market around and do that stuff. All right, see, this is what's annoying about this, though, because then I got to use my discipline. Now it went below 50, as I say, now it went below 54 again and went down to 54.80. I should have stopped out. See, this kind of thing, the problem with doing this is you have to pay attention when you're doing it. So, it's that if you're talking and chatting and not paying attention, you're not doing what you're supposed to do, which is taking off. See that? This is what you have to do. I just sold two more positions at what, 53.10 or whatever, 54.10 or whatever it is, and now they drop down to 54.85, 53.85. All right, so it's crazy not to sell them again because if it goes up, God forbid, then I sell some more. If it doesn't go up, then I'm going to be happy anyway. But I just picked up like $500 in seconds. So it's like you got to keep making these little moves that get you a few $100 here and there. Even as you're losing, you can make a little bit of money on the way up, and you keep bringing that basis higher. So that when you do eventually get a good retrace, it's going to pay off for you. All right, so now I have 10. I'm going to be happy to go to 14. I'm actually going to be very happy to go to 14 if we test 54.20 again. All right, but I don't think that's going to happen. I think we're going to finally pull back because if we get over 93.75, that's going to really start making the oil people notice that the dollar's coming back. See? Anyway. Where are we? Concentrate would you short any of the indexes? Absolutely. I would short the Russell at 1190 for sure. Here, in fact, I'll do it. Rejected. I'm rejected because Thinkorswim is saying, shouldn't you be worried about your oil play? So these two. All right. So in other words, yeah, 1190 I think is a good place to short. And same logic, the dollar's coming back, and that's going to hopefully get a reject. 2040, by the way, is a very critical line on the S&P. That's also a good spot to short, but it already bounced off there. these guys, we're a lot closer to 1190 on this trade. Look at that, 64, amazing, 65. It'd be funny if it goes all the way back. All right, so where are we? So that's all good. And let's take a look at, I did not get a chance to update the portfolio, but let's see how we're doing. I did very much get the short-term portfolio. What the heck happened? All right. So that's not, all right, so the short-term portfolio, that can't be right. That's got to be updated. Let me try this again. It was up 108% for a while. Look at that thing. That's from yesterday. I doubt it's up 108% now, though. Oh, God, I thought that was a short portfolio. I was like, how could that happen? No, that's a long term. All right, so the long term portfolio is zooming up, though, with all this action, 22.9%. These USOs are up, we're up $9,000 on the USO position, 50%. At some point, you got to say, gee, I should take that off the table or do something with it. The short term portfolio. So this guy, I forgot to get the total. Oh, that's pretty good. Still up 103%. All right. So we see, and again, we're still making new highs in our total of the combined portfolio. So that's fantastic. I don't know why we're up that much. I imagine it's because of this. So look at that, $15,000 gain, 108. We're up 108% on our USO calls. That's very nice, and we have 80 of them. And why is that? It's funny. Why is that? Because we did the same thing that I'm doing now. We rolled and we doubled down, and we rolled and we doubled down. That's how we went from 20 shorts to 80 shorts, or maybe 10 shorts to 80 shorts. And finally, we got the move we wanted, and it's paying off. So now the question is here. Wow, you know what? I got to call this right now. I got to call for the sell on these things because I don't think this move is sustainable. All right, so I'm calling right now for the sell on the USO 2015 July 17 calls, all 80 of them. Let's get the hell out of them. Can we get 375? USO. Make sure we can actually get 375. Sometimes that thing's behind. Now, what were those? The July 17 calls. That's why. July 17 calls. Here they are. Whoa, 410. Absolutely take that off the table. All right, let's take that later. I'm going to type that to the members. That's really important. Wow. Taking 410 for July. USO $17 EU LTP and comes off KT. Holy cow! So that's in the 25,000 portfolio and the long-term portfolio. Wow! You got to take that off the table. All right. Now where was I? That was funny. Holy crap! That's a lot of money. All right. So, yeah, because that's more than this. So we're up like 120% on that one position. That's why we're up so much on the portfolio. All right, so we're going to take that. Look, you've got to take the money and run. When you get a huge move like that, and we don't have any other oil play in the short-term portfolio, but that's fine. So now what that does is now puts us a little more bearish. We want to be more bearish because the market just made a huge move up. So by taking out a very big bullish position that we have in the short-term portfolio, we make the portfolio, 10%, 15% more bearish than it was. So we just made a nice adjustment, takes cash and puts the cash, and we love cash, right? We have 145,000 of it. Now we're going to have another, whatever that works out to, another 16, whatever that, 8 times 4 is 32. So now, what? Oh, well, yeah, of course, because the market got it here. So we have another $32,000 in cash is going to be added to this pile over here. And we're no longer risking that position. So why would we not want to do that? I mean, when you're up 120% on a position, you take it off the table. It's not complicated. Now, let's take a look where we're at it, because I want to look at the $25,000 portfolio, which has got to be doing nice. Look at that, 30%. Fantastic. Same thing, we're taking that off the table. Now, the thing is, what do we want to do about UCO? Should we take that off the table too? So that's a UCO July 7, wait, no, it's easy. UCO July 6 calls, and those guys are up 100%. All right, so now let's take a look at that. UCO. July 6 calls. 420, damn. Yep, UCO 2. All right, let's kill it. I'm sorry, you got to take that too. So, UCO 2 in the 25 KP at 420. Selling UCO 2 in 25 KP. Wow, that's going to leave us no positions in the $25,000 portfolio. Anyway, all right. You know, I hate to let it go, but, you know, I'm sorry because I should have thought of that when I was, you know, telling you all the reasons that oil shouldn't stay up there. All right, because, you know, honestly, that's a huge thing. When you got, you know, a move like that, you don't throw a move like that out. It's like up 8.6% in one day. And it's not, you know, it spikes up the price of the option. So it's a really good time to take it off the table, even if it does better. We, you know, really think 55 is going to provide some serious resistance. All right, so that's a good reason to worry about it at that point. So we think 55 is going to be a spot we take it off anyway, but we got such a huge move up now that the option prices get a really exaggerated sort of premium to them from this kind of move. And we can always re-enter and come up with a different trade, but at the moment, what do you know, for sure, take off 100% profits on 2 trades. How often do you expect to get that? So that's what we do at this position. See, that's what I mean, though. See, there's unfortunately the SCO, but you know, by cashing out the $15,000 profit on the USO, it's even to this. So I blew that profit basically, unfortunately. But the other profits are still there, especially in the long-term portfolio. We have a massive. We're still sitting on that one because, you know, again, it's long-term. And that one's not going to change so drastically on us, but we've got this nice $9,000 gain on this one too. All right, so I'm hoping, having locked in my $15,000 gain on USO, I'm hoping that I'll mitigate some of this loss, and then I'll have a nice gain. All right, so. Chrissy says, was your logic since the weather was getting colder, NG? Yeah, that was our logic for natural gas. It wasn't about the dollar, it was about the weather. And we have 30 days, and even the groundhog said we have 6 more weeks of winter. So, but in the weather maps that we printed in chat the other day, it clearly showed that we have 30 more days of pretty cold weather in the East Coast. The West Coast, not so much, but you have to keep in mind, let's take a look at the chart. I think it was yesterday's post, right? So, Bill Stock World, on Tuesday, it was here. I think it was here anyway. Let's see. Look for something weather mappy looking. Page down. Aha, that wasn't hard. All right. So this was Monday. So this week, very cold all around the country. We mostly care about New York and Chicago because this is where all the traders live. Okay, so here's New York and here's Chicago. Wait, no, there's Chicago, sorry. So here's New York and there's Chicago. That's what we care about because that's where all the traders live in the country. All the people are going to be trading commodities. People in California aren't really into that. So we care about when these guys are cold. So they're cold here, they're cold here. So there's nice cold weather. We've got snow, obviously. And it's going to be cold here. It's going to be cold here. Even though this is above normal in the winter doesn't mean that you don't need heat. It just means it's not as cold as usual. But colder than usual in these states where we know we need heat anyway means damn cold. So these guys are, it's not like they're out in their swimming shorts in the West Coast, it's like it could be 2 degrees, 3 degrees warmer than usual. But anything colder than usual means for sure we're going to be using more heat than normal. And if you look at the 30-day chart, normal means normal winter. These guys don't get that cold anyway. Well, these guys do, but not so here. These guys don't get cold anyway, so we don't care what temperature they are. They're not using natural gas except for their swimming pools. But here, look at this whole part of the country, normal winter here, so plenty of use of natural gas. Even colder than normal here means a very nice drawdown in natural gas is expected. That's all. That's all the logic is, and we have that to look forward to for 30 days, as of yesterday. BHI spread. Yeah, on the BHI spread, you got to look at it as, how are we doing there? Okay. On the BHI spread, which ones are you looking at? 1765? Yeah, those are ones you're not going to be able to get out of very easily. Look at that crazy spread. But you just got to go by the last number, 8. So the last sale went off at 8, and then you figure out that probably, and that's, since that's 6 and that's 10, 8 makes sense. So realistically, it's 8. How's BHI doing? Oh, BHI's coming. Look at that nice move in BHI too. Yeah, it was my runner-up for the trade of the year. I love that trade too. I mean, they've got an offer to be bought. And how's Halliburton doing? Is Halliburton moving up? Halliburton is buying them. There you go. So when Halliburton's stock price goes up, since they offered their stock, so they offered 1.12 of their stock shares for each share of BHI plus $19. That's what the offer is. So if you take 43, let me get that calculator. All right. So we take 43.3 times 1.12 plus 19, 67.50. That's what Halliburton has offered in a very, very binding way to pay for BHI. All right, so BHI is 61.50. So that's a bargain. Very simple. Okay, the offer is on the table. It's been accepted by BHI. And the only thing that can really derail it is if Halliburton stock falls to an unacceptable level where BHI is going to say, no, we don't want it. Now, meanwhile, when this started, it was like $10 higher. And obviously it's because oil dropped like it did that everything went to hell and so on and so forth. But somewhere around 65 is probably the right price at a minimum, even with crappy oil prices, for this deal to go through. So our spread was taking advantage of that. I think we did like the 50-65 bull call spread, and we sold in 2017. Oh, and by the way, here's the thing. Like, you can still do this now. If you sell the 52, look how these spreads are disgusting. All right. Wow, I don't even know how to discuss it. All right. Let's say that's a fair price. It probably isn't even a fair price, but let's say $3 for the 45 puts, right? You sell those for $3. You buy the 55, these prices are just completely unrealistic. You buy the 55, 65 spread, and I don't even know how to say this. Let's say 1070 is right, and let's say 570 is right. So let's say this is a $5 spread. This is probably true. So you buy the 55, 65 spread for $5. You sell those puts for $3. The 45. Now you have net 2 on a $10 spread. First of all, the spread is already at 61.70. The spread is already 6.70 in the money. That's number one. Number two, though, if the deal goes through and closes at 65 or better, and remember, right now we just did the math. It's 67 something for the the math is 67.50 now. If this deal closes at any time, you will get the full value back on your spread. You will make that money immediately. You don't have to wait till 2017. That's a big bonus on the spread. One of the things that when you buy these long leap options, the 2-year options, the 1-year options, one of the things that you're getting paid a premium for is that you're agreeing to wait a very long time. So you're getting paid a very huge premium by the puts that you sell and by the calls that you sell, because you're willing to wait 2 years, but you don't actually have to wait 2 years because this deal is going to close probably in sometime in the summer. All right, so we love that. Now, if the deal doesn't close, there's a cancellation penalty, breakup fee from Halliburton of $3.5 billion to BHI. BHI only makes $1 billion a year. So imagine like if this thing doesn't go through and Halliburton drops 3 years of earnings into BHI, don't you think that makes them worth more money too? So I love this trade. If it wasn't for Apple, this would have been our trade of the year. This is a fantastic trade. And there's so many different ways you can slice it. I think we've recommended it like 5 different ways already. So what are our views of the indices as they're above the strong bounce lines? They have to hold it for 2 days for it to count for the strong bounces. So we haven't held it for 1 day so far. And we'll see what happens tomorrow. So this is, again, and also though I always discount if we're up because somebody says the Fed said we're easing or something like that, that's not a good reason to be up. That's not because the economy is strong or anything great happened. It's just because people are talking. That's not a good reason to add $1 trillion of value to the market. All right, gonna have to call it soon. My throat's closing out. I got feeling a little bit sick. Malai says, when selling puts, how do you decide which price is a good one to sell? Well, I look at them. So I kept looking. All right, so in other words, on this one, I'm looking at this and saying, well, let's see, you can get like maybe $4 for this one or $3.50 for that one, right? But immediately I'm looking here, I'm like, well, you can get $3.50 for this one. And look, you can get $3 for this one. So I'm going to sell the lowest one I can get $3 for. If I was thinking possibly of selling the 50s, and it turns out I'd be lucky to get $4 for those, right, based on that spread. So I'd be lucky to get $4 for those. But I can go down to the 30 to the 45s and still get $3. Then I'd rather have the $5 cushion. So those are the factors. First of all, you find a strike that you believe in. Because don't forget, when I sell the $45 puts, I'm agreeing to buy the stock for $45. So unless I really, really, really don't mind owning that stock for $45, and $45, it's $61 now. So $15 off is 20-something percent, 25% off. So, you know, I'm agreeing to buy BHI for 25% off in 2017. That's just a fact. I'm saying I will buy this many shares of BHI for 25% off the current price for $45. That's locked in stone. So first of all, you damn well better be ready to buy it. That's position number one. Second of all, once you pick the general position you're willing to spend, then you say, well, how much can I get for it? And then once you see what you can get for it, you compare that to other positions around it to see if maybe you can get a better deal from somebody else. All right? Also, if you look at the 45s here, the 45s here are $2. So I'm only getting paid another $1, which isn't very good for waiting another year. So I'm giving the short putter 1 more year to get his money to hopefully for BHI to go down. But since I think this deal is going to close and the whole thing's going to go away, then it's great. 53.30. What? Hey, are you telling me that this thing's making money while we're doing this? I'm so happy. Where's my thing? Oh, that's fantastic. No, I'm not making money. What's happening? Nope. Obviously, we did not calculate that very well. Apparently, since I have 10, I still need another 50 cents. I need to get to 52.50. Well, obviously, from being down 15,000, I should be pretty freaking happy about this. Now, here's the problem here. It's very, very likely to bounce off 53. Now, the question is, so I got to watch the 53 line closely, because if it bounces off 53, then the question is, you know, I could quickly lose 20 cents, which is $2,000. And here it goes. Watch, see how that's happening? So it almost makes sense to get out, but then it would be hard to get back in. But I think what I'm going to do here is buy and buy. And now we'll see how the 53 line gets handled. So now, unless it goes back over 53, I'm going to let this go. Oh. Whoa. That's what I was worried about. Wow, look how that filled. It wasn't even there. All right, so now we got 6. Let's get down to, well, being greedy. All right, let's get down to 5, if we can. Wow, that's falling fast. There it goes. All right. So now I'm down to 5. So here's the thing. Now obviously I need $1 to get even. I'm going to be thrilled. I'm thrilled already. Remember how I said we were kind of even because of the USOs. So now it's only $5,000 I could care less. So I could cash this out and it's not a big deal. And again, don't forget, and part of the reason I don't care is because I have $500 over here and I got $3,000 over here. So no, not that one. Oh, I forgot I did another one. Damn it. Now I have $3,400 over here. I forgot all about that. You guys got to remind me of these things. All right, let's take that off. Because we should be locking in profits now because I'm still down for the day. All right, but I'm going to lock in. Let's take care of that. All right, you want to keep going down? Go ahead. All right. Nope. That's what I thought. There you go. All right, now I don't have to worry about that. All right, so now I have 4,000 here. I have 5,600 here, so that's a $1,600 loss for the day, which is annoying, but $14,000 profit or $16,000 profit on the USOs. I could live with that. I gave up 10% of my USO pricing as I was hedging. That's okay. But yeah, the average price on Thinkorswim gets really screwed up because what happens is when you go in and out of the positions, oh, look at that, damn. When you go in and out of the positions, where's my train of thought? Oh, yeah. When you go in and out of the positions, it changes the average to the average of the ones you have left, which is kind of annoying because it would be nicer if it just gave you your, I don't know. It does a last in, first out. It should do something different, but I couldn't even tell you how it should work. So frankly, it does what it does. Now I'm really pissed though, because I could have held the whole thing and made money. But all right. As I said though, the problem is I'm doing this webinar and I want to teach you guys the proper conservative way to do it. The proper conservative way is to try not to lose $25,000. So, you know, that's why I kept scaling out, because you got to scale out, because God forbid it went the other way on me. At least I'd have the firepower to get back in and buy some more on the way to 55. That didn't happen. It went down, but I had no way of knowing that. I didn't know it wouldn't go back to 55. Why you did not hold all contracts? Like I said, because it was a lot, and because I was down $15,000, I didn't want to go down $25,000. That's when I started to get annoyed. As I said, I was okay with it, and I cashed. That's why I started looking to cash in. I want to cash in my USO, cash in UCO, cash in my other positions that cashed in on this one. I don't have any open contracts here. So I could survive where I was, but I didn't want to overdo it, because don't forget, once you have 12 positions open, a move of just $1 against you to 55 would have been another $12,000 loss. That's a lot of money. All right, but cutting back to 8, which is what I did, then if I had an $8,000 loss, I could then go back to 12, and I would raise my basis pretty substantially at 55, and then I would be comfortable looking for a pullback from 55. It just wasn't worth the risk, though, in case it went the other way. And as it is now, see, as now I got 3,500 up here on the Russell, and I got 500 here, and I'm down 4,000 here. I can shut this down, and not even, I could care less right now about what this thing does, so it's great. But so that's a lesson, but I really, really have to stress, though, that this is not the way to play unless you have a very, very large amount of margin, obviously, that you can afford to do. I don't even know how much margin I was using, but probably I would guess I used $80,000 of margin when I was doing that. So first of all, you have to have a large amount of margin free that you can play with. Second of all, you have to have the ability to lose $20,000 without it like messing up your day. And third of all, you have to really stick with your plan, which is what I was doing. I mean, I wanted you saw how I did that. It's like I said, well, damn it, because the dollar was doing what I thought it should do, and oil wasn't. So therefore, I wasn't going to get out of oil when everything else was doing exactly what I thought it would do. And where is the dollar now? But you've got to really. Like I say, you can't just have these rules. You have to understand how these things work, because if you understand it, then you don't second guess yourself. Because second guessing yourself is death in this sort of thing. You really have to have the conviction to go through these positions. See, so now I'm upset because I took the money off the table here and here and here, which I should be doing, but that's because I expected a bounce, which would let me add some more back. But now it's not even bouncing. It just keeps going straight down, which is kind of annoying. So it's hard to be happy at this point. You know, believe me, when you're down in a position like that, it's hard to get yourself happy. You know, but I'm obviously very happy that I'm down $10,000 less than I was on that position, so I'm extremely happy. But I'd be a lot happier if I could have a bigger position short at 54.50, and well, if it popped back to 53.50, I'd be even happier if I had like 10 instead of 5, and then ride it back down. Anyway, but that means it's a good position, by the way. It's always a good position if you wish you could have gotten more. That's when you know you did a good job, because it's like my only regret is I don't have a bigger position, so that's okay. All right, so why not hold the contract there? Okay, so that's what that is. We talked about the portfolios. We're going to do a bit of I'll try to get to a review of the portfolio positions. At this point, I mean, you know, like I said, by taking off that long USO position in the short-term portfolio, you have to always be cognizant of what you're doing too. So by taking off the long, oh, look at that, 122%. And we actually got more than that when we took it off. So now we're up 106%. That's crazy. Because we removed that long position, though, we have to be cognizant of the fact that we removed a very big long for a market moving up. So now we've generally just pushed ourselves to more of a downside hedge on the market. So there's things we're going to do, but now we have a lot of free cash, and so we're probably going to add a little bit here, add a little bit there. And then as we get more bearish in the short-term portfolio, that then enables us to get more bullish in the long-term portfolio, right? So we can add more to some of our other positions in the long-term portfolio. And we'll take a look at, I'm already going to regret because we didn't get more rig, and we didn't get more cliffs, but we had them anyway. We have, there's rig, we have the stock. We only just bought that on 12.4. And here's our cliff position over here. So we, you know, these are not big positions. That's why we were never worried about them. In fact, we were very aggressive. What we did is we have a short put and a long call. Okay, so you know, so we were very aggressively positioned here. I wish we had doubled down, and we still could, but now I don't feel like it because it's not as good as it was. But anyway, so we'll be looking at these positions and say, well, which ones do we want to add to, which ones do we want to do stuff. Oh, okay, last thing, very important. Look how ridiculous this is. Apple is at 118. Yet the 90-120 bull call spread is still showing net, what is that, 15? It's like net 15. It's in the money. It's almost 100% in the money. And it's showing you $15. If you want to make money, you know, people say, well, how do I make 100% like you do? That's how you do it. Don't forget, this is our trade of the year. You buy the $90 calls for $34.30. All right, Mr. Calculator, please. Let's make sure I do this right. $34.30 minus, what are we going to sell? We're going to sell, this is 2017, of course. Damn it. There it goes. All right. And we're going to sell the $120 calls for $18.15 minus 18.15. That is $16.15 for that spread. You buy the $90 calls, you sell the $120 calls. Apple is at 118. This spread is almost entirely in the money. If it hits 120 and stays there, you are going to make $13.85 on this spread. But then you can add to that the sale of the $80 puts for $5, $5.10 in fact. So minus, now we're going to minus $5.10. Now, of course, not everybody. Now, if you don't have the money to buy Apple, don't do that. Making $13.85 on 16.15 is a lot of money. It's like 80-something percent, 85%, whatever it is. So if you just make the $13, you should be happy. But for those of you who can, it's not a big deal margin-wise, but you have to really want to own Apple. But if you really want to own Apple for $80 a share, then if you sell 10 of them for $5, Your margin's only $5,000. Okay, that's fine. They're going to hand you $5,000 in cash. You're going to have $5,000 in margin used up. So that's for 10. I'm obligated to buy 1,000 shares of Apple for $85, for $80. Don't forget that. All right? But if I'm willing to commit $80,000 of my portfolio to Apple, then I can knock $5,000. It doesn't sound like a big deal, but it is a big deal. I can knock $5,000 off my purchase price of the $30,000 spread, the $30 spread, and I knock the price down from $16.15 to $11.15. So now on $11.15, all right, so now it's $11.15 to buy it, and that means I'm going to make $18.85 is my profit at 120 divided by 11.15. So now I'm going to make 169%. But the more important thing is you're going to make $18,850. Oops, not So if this trade goes well, and that, by the way, let's try it again. It's these $90 calls, selling the $120 puts. All right, and that net was $16.15, I think, right? So it's $16.15 for the 90 120 bull call spread. Then you sell the $80 puts for $5.10, but let's say 5, so it doesn't matter. That brings you down to $11.15. All right, so then you're spending $11.15 or $11,500 for 10 contracts. So you don't have to do 10; you can do one for $1,500. You know, $11.50. And you're going to make, well, obviously, you're going to make $18,850, all right? And against what? Against $5,000 in margin. So it's huge money on margin. Now, from an allocation standpoint, if you have a $500,000 portfolio, that means you have $1 million in margin. You're not using any margin, so it's not going to affect your life. But you do have to always keep an eye on it because at some point Apple could drop precipitously. And don't forget, you know, it's at 120 now. You're talking about 80. It had to drop 33% for you to even be close to having to buy it. So where was I? Oh, yeah. So you're going to make $18,850, and the most you're really allocating in margin, even if you allocated a full $40,000 and put it aside because you may end up buying $80,000 worth of Apple, so at ordinary margin that would be $40,000 in margin. Even if you did it that way and you allocate against $40,000 in margin, are you kidding me? There it is, divided by 40,000. That's a 47% return on margin. That's fantastic. But it's not really on margin because you're not using the margin. You're just allocating the margin as a block in your portfolio. But if you can make 47% back in 2 years on anything in your portfolio, on any allocation, that's what you need to be doing. So you always have to look and say, well, what's my worst case? And my worst case is I'm going to own 1,000 shares of Apple for $80. If you don't like that worst case, then don't do it. Obviously, but if you like it, if you say, wow, I'd love to own 1,000 shares of Apple for $80, it's $118 now. Would you buy it right today for $80? Because this goes back to the whole thing we were talking about last week with the Volkswagens, right? I know what Apple's worth. There's nothing that's going to happen to Apple that's going to make me not want it for $80 in the next 2 years. It's almost impossible. Something incredibly horrendous would have to happen to the company. I can't even imagine what it could possibly be. And again, it's the same thing as saying, would you like the Volkswagen Beetle? What is going to happen to a Volkswagen Beetle over the next 2 years that's going to make you not want it for let's say it's $20,000 now for like $12,000? Why would you not want it for $12,000 to commit to it? And you say, well, it could get in an accident. And they say, okay, well, get in an accident, but how bad would the accident really have to be? And the same thing with Apple. They could have an earnings miss. They could have the iWatch could cause cancer. They could explode on people's wrists and burn them. You know, something like that. Who knows? But you know, is that going to destroy the value of the company to 30% off, or is it going to make them have a recall? All right, so you have to think about like the whole company, how it operates, how it functions, and whether or not you're comfortable with that play. But if you are, then this is fantastic. And you got to look at all your plays like that when you can do, especially if you do long-term put selling. But like I said, you don't have to, because you could just put the money into the long-term spread and make almost 100% return, make an 85% return by just doing the long spread without the fancy sale of the short puts. You don't have to do that. It's an option for rich people. It's something that people who can really afford Apple can do. If you can't really afford to do that with Apple, then just put 10 contracts into this and you spend then you spend $16,150 to make 11,850 divided by 16,150, 73%. So you make 73% back on your money. That's with no option, no margin, no nothing. You're just going to basically put the you're going to put the 16,150 into the spread, and and you'll get 11,850 profit if it goes well. And the other nice thing about that is because you have the spread, it's very hard for the spread to lose money quickly because you've always got the short put you sold against, the short call you sold against. And so it's very easy to set a stop where you're only going to lose like $4,000. You say, well, at $12,000, I'll pull the plug on this spread. And that means you don't have a huge risk factor. Are you kidding me with oil? Oh, 53. Oh, I'm sorry. That's right. I thought it was 52. I'm like, are you kidding me? Because I'd be so pissed if I missed 52. All right, let's. All right, let's sell a couple more. One. Let's see what he does. We'll go two more. All right, thank you. Thanks, Mike. I appreciate that. All right, where were we? Forex. Oh yeah, we're looking at Apple. All right. So that's a simple trade. Now, somebody asked, how do I feel about the 110? All right, first of all, the 110, you can always evaluate. I mean, here here you're spending $22. That's not bad. Oh no, I'm sorry, 110, 150. Oh, that's very different. I'm thinking that's not different. It's very different. So here you're spending $22.50, $22.65. Well, back to Mr. Calculator. It's too long in the session for me to be doing this out of the calculator. 22.65 minus, by the way, I make horrendous math mistakes when I don't use a calculator, so that's, and minus 875, minus 8.75, 1390. No, why would I do that? All right, so Nate, I'm sorry, Molly. That's, my thing on that is, why would I spend $13.90 where you're going to only make $10 if Apple has to be at $25 over? It has to be $135 for you to make $10. $135 for you to make $10. Whereas on this spread, on the 9120, I'm putting in $16. I'm putting in $3 more, not even $3 more, and I'm going to make $10 at 120. You lose money at 120. Now, if you read my post this morning, I made this point, and I made this point very clearly in today's post. It's like you are better off taking less risk and making less money and making it consistently. Look at today's post. I make that point today, just so happens, okay? Go for the more conservative plays that are going to almost certainly make you money, because not all of those are going to work either. I know it seems exciting that you could make all this money if Apple goes to 150, and I think Apple could go to 150. But it's not as good as saying, my God, I can make 75% in 2 years at 120. 120, I mean, even though you think Apple's the greatest stock in the world, 120 is $2 higher than it is now. 150 is $30 higher than it is now. It's 20% higher. I have a 20% edge on you in the price of Apple stock. And by the way, don't forget Apple is a $600 billion company. So it's $120 billion has to flow into Apple for you to get that money. And your risk is higher, your reward is greater. Sure, you're going to spend $13.90, and you're going to get back $40. You're going to get back $27. You're going to get back double what I would get back. But you know what? I would rather buy 2 of the lower spreads. I think I have a better chance of making my money than you do. All right? That's the way those work. I always would rather go for the more conservative play. And I am perfectly happy. You don't need to make 200% on your stocks. You need to make 20% often. That's how you make your money over the long term. Making 20% consistently is going to make you a very, very rich man. All right? Declan, thanks for being concerned about the futures, but frankly, I enjoy that. I enjoy it. It's very challenging, actually. This is my first loss in the futures for a long time, so we've been having a hell of a good streak, but we'll see what happens. And what are the strikes on the Apple spread again? 80? Are you kidding me, Burr? Come on. How many times have we done this trade? 91.20. Yeah, you're not paying attention either, I know. All right, guys. Well, thanks for listening. It's been a very fun webinar, and we shall do this again next week, and that'll be it for now. I'm going to rest my voice and all that, all right? Have a good day.